When do you actually have to pay inheritance tax in the UK? Well, the answer might genuinely surprise you because the deadline is incredibly tight. Get it wrong and the costs can be pretty severe. But don't worry. In this guide, developed by the experts at My Tax Accountant, we're going to give you a clear, step-by-step executor's roadmap for 2026.
So, if you find yourself handling a loved one's estate, you need to know that a financial clock starts ticking from the moment they pass away. And honestly, it moves a lot faster than most people think. We're not just talking about some far-off paperwork deadline here. We're talking about a hard deadline for payment.
6 months. That is the number that matters most. You have just 6 months from the end of the month of your loved one's passing to pay any inheritance tax that's due. If you miss that deadline, HMRC starts charging interest, and believe me, it can spiral out of control really quickly.
Okay, so here's our game plan. First, we'll look at that ticking clock and the key deadlines you absolutely cannot miss. Then we'll dive into the biggest challenge most people face, the pre-probate payment puzzle. After that, we'll show you exactly how to pay, what happens if you're late, and finally, where you can turn for expert help. To make all this a bit less abstract, let's follow a real-world example. Let's meet David. He's a freelancer living in London, and he's just been named the executor for his late mother's estate. It's a situation that, frankly, many of us could find ourselves in. Now, his mother's estate is pretty typical. It consists of her flat and some savings in the bank. As we follow David's journey, you'll see exactly how these rules and deadlines apply in the real world, which should make it all much easier to understand.
Now let's look at the next step. Here's the first thing that catches so many people out. You'd think there's just one big deadline to worry about, right? Wrong. When it comes to inheritance tax, there are two completely separate dates that executors like David have to get right. Mixing them up is a really common and very costly mistake.
This timeline reveals something absolutely critical. The clock starts ticking from the date of death. Now, look closely. The tax payment is due within 6 months. But the main paperwork, which is a form called the IHT 400, isn't actually due for a full year. The payment and the paperwork are on two different schedules.
Just let that sink in for a moment. You are legally required to pay the tax bill a full 6 months before the final paperwork is even due. What that means is your number one priority as an executor is to figure out that tax bill and get it paid, just to avoid those painful interest charges.
But that's not all. Here's where most people go wrong. Let's talk about the single biggest challenge that executors like David face. It's a classic catch-22 situation that can feel completely impossible if you don't know the way out. And this is the heart of the problem. The money to pay the tax is sitting in the estate. But as the executor, you can't actually access any of that money. It's all frozen in their bank accounts until you have a legal document called a grant of probate. And the big problem? You have to pay the tax before you can get the grant of probate.
Let's be really clear about what probate is. Just think of it as the legal master key that unlocks everything in the estate. Without it, you can't touch the bank accounts, you can't sell the property, you can't do anything. Everything is legally frozen solid until that grant is issued.
And this sums up the catch-22 perfectly. It sounds like a total paradox, doesn't it? But don't worry, this is a very well-known problem, and HMRC has created official pathways to solve this exact puzzle. You are not expected to pay it out of your own pocket.
So how do you actually solve this puzzle? Well, fortunately, there are several established methods for executors to unlock the funds and pay that tax bill directly from the estate, even before probate has been granted. And here is a vital pro tip for you. Before you do anything else, you absolutely must get an inheritance tax reference number from HMRC. You apply for it online, but you need to do it at least 3 weeks before the payment deadline. Without this number, any payment you send can't be matched to the estate, and that causes massive delays.
Okay, so the main solution to this puzzle is something called the direct payment scheme. It's basically an arrangement with most major banks. As the executor, you fill out a specific form. It's called the IHT 423 for each bank. You send that form directly to them, and they are authorized to transfer the money straight from the deceased account to HMRC to pay the tax. It neatly bypasses that probate lock.
But what happens if there just isn't enough cash in the bank accounts to cover the tax bill? This is super common, especially in David's case, where most of the value is tied up in a property. Well, you do have other options. You could get a short-term executor's loan, the beneficiaries can lend the money, or you can use a special installment plan from HMRC.
Now stay with me. This next point might surprise you. For assets that aren't cash, like property or shares in a business, HMRC lets you pay the tax in 10 annual installments. This is a huge help because it means you don't have to rush to sell the family home. But, and this is critical,
the very first of those 10 installments is still due by that initial 6-month deadline, and HMRC will charge interest on the rest.
So let's be crystal clear about what happens if you miss these deadlines. Getting this wrong isn't just a small administrative slip-up. The financial costs to the estate can escalate incredibly quickly. First up, there are penalties just for filing the paperwork late. If you miss that 12-month deadline for submitting the IHT 400 form, there's an immediate initial penalty of £100.
And if that delay stretches on for more than a year, that penalty can jump significantly, potentially all the way up to £3,000. And remember, that's completely separate from the interest being charged on the unpaid tax itself.
And this is the big one you really want to avoid. As we head into 2026, HMRC is charging a hefty 8.0% annual interest on any unpaid inheritance tax, and that interest starts piling up the very next day after that 6-month payment deadline passes.
This table shows you the financial damage perfectly. Just take a look. If the estate has a tax bill of £100,000, being just 1 year late will cost the beneficiaries an extra £8,000 in interest alone. For a £200,000 bill, that's £16,000 just gone, all because the deadline was missed.
Wow. Okay, we have covered a lot of ground, from the deadlines and that tricky payment puzzle to the high cost of interest. So let's just recap the most crucial points before we talk about getting some professional guidance.
So here's what you absolutely must remember. Act fast. That 6-month payment deadline is non-negotiable. Don't forget the catch-22. Tax has to be paid before you get probate. Use the direct payment scheme as your #1 tool to unlock funds. And finally, never underestimate that 8.0% interest rate. Hitting these deadlines is key to protecting the value of the estate.
Now, it is really important to remember that because every estate is different, the information we've shared today is for general guidance only. You really shouldn't rely on it exclusively when making financial decisions for your specific circumstances.
Look, navigating this process, especially while you're grieving, is incredibly challenging. So before you make any decisions, you really must consult a professional. The specialists at My Tax Accountant can provide the expert guidance and peace of mind you need. You can reach them on 0208-570-8531 or drop them an email.
And for more clear, practical tax advice just like this, be sure to subscribe to the My Tax Accountant YouTube channel. Thanks so much for watching, and we'll see you in the next one.